Welcome to the Property Business Podcast. As usual, joining myself, James George, I am joined by James Hughes and Jonathan Woods. Morning, boys, especially morning to Jonathan. How are you feeling after your London Marathon run yesterday?
Hi, good morning. Yeah, my legs are in bits. I'm in a lot of pain, but it was the most incredible experience ever. It was just so, and it was amazing to actually see you on course, James. I saw you waving from the sideline, which was brilliant. I managed to miss my entire family, but I saw you because I didn't know where my wife and kids were, but they were battling to try. They saw me, but I didn't see them. But it was what an incredible day. Just, yeah, I mean, for anyone that's for anyone that's done it, it doesn't matter whether you're running it in 2 hours or 10 hours. Just to get around that is an achievement. It's amazing.
I don't think you won it though, did you, Jonathan?
I didn't win, no, but I won my own race. So, I wanted to get below 4 hours, and I got 3 hours 46. So I was pleased with that. And we raised a lot of money for a good cause.
Well done. As I said to my kids, second is the first place loser.
Yeah. John's claim to fame was he came third at the eXp conference 5 kilometers in America last year. So, yeah, we're keen to go to the American conference to kind of see if that was a real result or if he kind of just snuck up at the last kilometer.
It was actually true. I did come third, and it was in Orlando. I didn't do the Vegas one, but hopefully if we're in Miami, James, then we'll give that one a go as well.
Some fierce competition.
It's probably on his CV.
Yeah. Well, again, that was for a good cause, for the Helping Hand, sort of agents cause that they do as well. But I think that was the main thing. It was for raising money for breast cancer now, and and I was really pleased to raise a good amount of money for a fantastic cause, and also push my own to sort of limits on what I can do. So really enjoyed it.
Well done. Well, let's get on with the podcast. This week we are joined by Sam Pemberton, and we are going to be chatting mortgages this week. How are things with you, Sam?
Very good. Thank you very much. Thanks ever so much for having me on today. Really appreciate it.
Well, let's kick off with finding out a bit about yourself, how you got into working in mortgages, etc. Tell us a bit about yourself, Sam.
Sure. So it's a little bit of a story through time, but I guess all those many years ago, I went to university, studied economics, and then came back to London in the early 2000s and started working as a financial advisor in the West End. And when you're a financial advisor doing kind of holistic advice, you work in many different sectors. So you might do a little bit of investments or pensions, insurances, and in particular mortgages. And I worked as an IFA for a number of years, and then probably around 10 years ago or more, I specialised particularly in mortgages, and that's where me and John first met each other, I would say. And I worked for a large mortgage brokerage in central London and worked with some fantastic people. I had an amazing time. Worked there for 4 or 5 years. And then most recently, I have started working as a little bit more of a generalist in financial advice, but heading up a mortgage desk for an IFA in Cobham in Surrey. So always been in that kind of financial advice sector throughout my working life, as I say, from when I left university in all those many years ago, about 20 years ago now, and always enjoyed, in particular, working in that mortgage side of things when I first started, and that's just carried on, and I've just been going through that, like I say, now for the last 20 years or so.
You've obviously been through some ups and downs over the years. I think of 2006 probably being an interesting period for you. But yes. What's it like now? What's the market like now? Especially, we've had COVID, we've had Brexit. What things are like now compared to they have before?
Well, they've certainly improved over the last little while, and certainly from the beginning of this calendar year, things have been improving. I mean, the landscape, as I'm sure we all know, can appreciate, has been dominated over the last 2 years by record increases in the Bank of England base rate. We know that obviously inflation started taking hold around sort of 3 years ago. That was through a few different kind of macroeconomic factors. And the way that the centralized banks obviously look to keep control of inflation is they look to increase the base rate, the sort of domestic interest rate that's applicable. What they're looking to do is they're looking to obviously incentivize people to save rather than to borrow. And that has quite an effect on the mortgage market. And we've seen that there was obviously large, going back to kind of Liz Truss, there was very large spikes in the fixed rates. And this kind of casual tick along and casual increase of the base rate over the last few years. And that seems to have peaked, I'm pleased to say, at the end of the last calendar year. And now we appear, as inflation's come down, inflation domestically is around kind of 3.5%, depending on what factors you're looking at. That's obviously really improved the mortgage market. So the residential rates, the buy-to-let rates, the limited company buy-to-let rates, and all those other specialist areas, development finance and bridging and so on and so forth, all of those rates have started to come down. In the broader context, just to take it back to, as you mentioned, the kind of financial crash of 2006-07, we obviously had a period there of maybe 10 years or so of super low rates. So if you compare the two, what the rates are today compared to what the rates were during that sort of super low period, then obviously the rates do seem a little bit higher. But I'd say that we're coming back probably into a bit more of a normal area now. And certainly you can see that. Perhaps you guys have experienced it too. I certainly have, where you're seeing more first-time buyers coming to the market. You're seeing just the mortgage rates just being a bit more affordable and a bit more appealing. So in a general sense, rates are still a little bit higher if you're looking across the kind of broader context of it, maybe over the last 10 or 15 years. But in a more recent terms, they're much better than they were in the kind of middle end of last year. So that's very positive. And we definitely envisage, and the market is pricing in more base rate cuts, more interest rate cuts, and that can only be a good thing for future house purchases, or remortgages for that matter, generally that kind of mortgage and lending landscape.
What's the kind of best rates you can get at the moment, Sam? I was going to say, what's the kind of best rates you can get at the moment, Sam, for resi mortgages?
That's a good question. I had a quick look because I thought that might be a question, so I thought I'd do a little bit of research. The market itself is a little bit truncated, which is not a bad thing necessarily. But if you're looking at,
because I know you secured me quite a good rate just for my own residential mortgage only a couple of months ago, and I've noticed that the bank that I'm with has actually increased their rates from that point now. So only a small amount, but it has gone up a little bit. But yeah, just wondering what's kind of best rates out there for people that might be looking at getting a residential mortgage.
Yeah, for sure. Well, just on there's a couple of nuances or a couple of new developments in the mortgage market to talk about that. They're a little bit more linked to new builds. But generally speaking, I think if you've got a reasonable deposit, you don't have to have the best deposit, but if you've got a reasonable deposit, you're probably looking at a rate that's around kind of 4.25, something like that, on a residential product. And that goes up a little bit. If you've got a little bit less deposit, you're probably looking at maybe 4.5, something in that ballpark.
And what about buy-to-let? Sorry, James, I just jumped on top.
Go ahead.
In terms of buy-to-let, is that, because I know that kind of says it tends to be a little bit more expensive, or it has been in recent times, and with some really huge arrangement fees. Are those arrangement fees still in the eye-watering levels at the 5% and 7% levels?
It's a good question, and I would say a little bit like the residential side of things are improving, but in particular with buy-to-let, we're seeing much higher than usual arrangement fees. You're quite right to highlight those. To talk about that in a bit more detail. So with all these rates that increased over the last year or two, the buy-to-let market came under quite a lot of pressure, and as you know, there's this kind of ratio that lenders want between the rent that's payable and the mortgage payment, effectively.
Yeah.
And they want to see that there's that good coverage in place, that things aren't too dependent. If, for example, there was a rent payment missed for a month because they may be changing tenancy or whatever, that the whole situation isn't so tight that it might collapse. So they put in a little bit of a margin, perhaps a little bit of a too high a margin, but nevertheless, the margin's in there. And what they wanted to do is they've had to keep the rates on buy-to-lets what they refer to as artificially low, because they need to maintain that ratio between rent and mortgage payment. If they'd allowed for the buy-to-let rates to increase in line, or how we saw the residential rates increase, then it would have been very difficult. Yeah, exactly. It doesn't stack up on that rental ratio, and so it would have been very difficult for us to be able to secure any buy-to-let mortgages. So they kept those rates low, but the effect of that, how they costed that into the contract, if you like, is they increased greatly those arrangement fees. So to answer your question, yeah, I mean, there are a spectrum of products. Some of them do have hyper competitive rates, but in conjunction with those hyper competitive rates, those artificially low rates, really, you get these sort of mammoth 5%, 6%, 7% arrangement fees that can run into the tens of thousands. So
it's kind of sticking the interest on the mortgage rather than paying it on a monthly, basically, isn't it?
Yeah. You've totally hit the nail on the head. They've worked out, if you like, what the total cost of that mortgage would be to the lender, and they've artificially reduced the interest rate for the consumer, but the way that they've still maintained their profit margins as a lender is they've bumped that onto the arrangement fee. You've totally hit the nail on the head, yeah. So, you know,
not so great for landlords, but
yeah. I mean, again, it's a little bit up to the person. You know, I have actually arranged some of those very high arrangement fee buy-to-let mortgages. If it's to someone's liking, some people say, you know what, I will put £20,000 on the loan because I know then I've got this really low monthly payment, and that's fine for me. Obviously, you know, personally, I always look to try and have a foot in both camps, where it's most efficient for the consumer. You know, a reasonable arrangement fee and a reasonable interest rate. You know, and we would obviously talk through those and the pros and cons of that.
I suppose it depends on how much equity you have, isn't it? If you've got quite a chunky, but if you're like 50% up plus, then it doesn't really matter if you suck on an extra 20, 30. But if you're kind of close to the bone, or you refinanced and pulled cash out of it, then there's probably not much left in to throw that extra money in. And that's why I suppose we're seeing a lot of, you know, are you still seeing, I don't know if you've got a sort of portfolio on your sort of your refinances, but are you finding a lot of landlords have sold or are thinking about selling? Because I've certainly had quite a few in my portfolio that are selling because of that whole point around finance, because they just can't make it work.
Yes. I think some of the tax changes that came into effect, coupled with the increase in the interest rates, have certainly made the landscape for landlords more difficult and probably not quite as yielding as it was. And I think you're right. There has been, I mean, as has been well documented, there has been some landlords have left the market because of that, for sure.
I remember when I got my first place, this was back in 2009, we were a first time buyer with a low percentage down, and we paid 6.5%. But we got like a 2-year mortgage, and then we refinanced for much less 2 years later. So it's always just something for people to keep in the back of their mind. In the US, it's a 30-year fixed rate. So don't get me wrong, you can refinance when it drops, but whether you've got the best interest rate in the world, you haven't got that for a long period, and you've got to then make sure that you can cover the mortgage when things go up, and vice versa. If you're looking to get an investment now, you've also got to think about, well, okay, it might be on the edge of finances right now and whether it's going to be a good investment now, but eventually things will probably improve. and that house price might increase and stuff as well. And obviously there's lots to take up. Now, I remember when I got my first mortgage, I didn't know about mortgages like I do now. I wasn't in the industry. So I went to my bank and just assumed that if I went to my bank, I'd get the best service. There aren't a better option out there. So I now know from being in industry that's not the case, Sam. But why? It's good to hear from you. Why should someone come to you rather than just going to their bank?
Thank you. Yeah, I mean, that's a good question and obviously pertinent when considering the options that are available to you. There's a number of reasons, really, why you'd want to go and speak to an independent mortgage broker as opposed to a bank. In particular, at the very start of the process, it's important to know what your budget is. You know, what can you actually afford? And a bank or a lender will have a certain set of criteria and analysis on someone's income. And as I'm sure you know, people can be paid in a variety of different ways. You can be employed, you can be self-employed, you could be a limited company director, you could be a day rate contractor, you could be inside IR35, just to name some of the larger constituents of how people are paid. And the analysis of that income varies from lender to lender and from bank to bank. So you don't know how much you can borrow unless you really have a broad understanding and access to the whole of the market as an independent mortgage broker would do. In addition to that, you know, the rate that a particular bank or a particular lender would offer you are unlikely. You know, you might be lucky and your bank might have the lowest rate in the marketplace, but more, you know, the chances are that they probably don't. So again, not only budget, but who's got the best rate in the marketplace. And then there is a knowledge of that marketplace that a good experienced independent mortgage broker will have, probably over and above someone that you might meet in a bank. You know, not casting any aspersions on somebody that works in a bank, of course, but you know, from my experience, having dealt with them as from a professional perspective and also dealt with them on a personal perspective, you know, that level of knowledge of other products, of other lenders and how they treat people's circumstances is quite limited. So you want to talk to someone that's got that experience, and they can then look and understand what you want and fit your requirements around the type of mortgage that you should have and is best for you, rather than talking to a particular bank or a building society who only have a small section of that marketplace. And what they might be offering you might be the best that they have, but in the broader context of the market, it might be fairly second rate. So you'd always want to talk to an independent mortgage broker because they're going to have access to more lenders. They're going to be able to work faster. They're going to be able to understand your situation better, and they're going to have more experience to identify what you're looking to do and make sure the mortgage, which is a huge commitment, a financial commitment, is correct for you. And so, yeah, for sure. I mean, there's lots of other reasons. You know, obviously you're going to be more accessible than probably someone that works in the bank, and you're going to be more personally, I would say, connected really to that person or that couple. You're going to build that relationship. You're going to get to know them. It might take, as you guys probably have experience with, it might take a year or more. You know, I might talk to somebody today, and they might not actually buy a property until the middle of next year. Well, during that time, I might have spoken, their circumstances might have changed. Maybe their partner's got a new job. Maybe they've got a second income. Maybe they've had a child. You know, all these various, you know, different things that happen in people's lives that we can all think of. But and having that relationship with a mortgage broker, and obviously having a relationship with with an estate agent, is going to be able to. They're going to move and they're going to adapt to what that person's circumstances are. And it's just
From an agent's point of view as well. I nearly lost a deal for one bed in Croydon where they are Hispanic speakers. They went to Nationwide, and I was trying to translate for them. I was trying to find out what was going on, but Nationwide wouldn't speak to me. Unfortunately, we had to wait for the final pay slip. That took 2 months. They couldn't quite get the mortgage. The client actually said, James, get them to speak to my independent mortgage broker. He then spoke They then spoke to him, and then they've got the mortgage approved with, I don't know, Halifax HSBC, and I can now reach out to that broker, where previously I wasn't allowed to speak to the bank, and it's pretty hard to get hold of them. So to control an actual deal from an agent's point of view, if it is going to the bank, there's a higher risk of it kind of falling down, because it's pretty hard to get hold of the bank. But independent mortgage brokers, it's WhatsApps, it's, hey mate, what the bloody hell is going on? And then you have a sensible phone call about trying to get it resolved as well.
Yeah, the most important person for me when in the US, obviously I'm learning here how things are different in the UK to the US, but in the US, the most important person in my business was my mortgage broker. And our relationship was unbelievably close. And as soon as I had a buyer, the first thing I would do is say, right, can you speak to my mortgage broker and find out, first of all, like Sam mentioned, find out, first of all, what are you most likely going to qualify for? What are your payments going to be? Mm-hmm. And then throughout the process, we can help them. As you say, Sam, it could be a few years till they actually end up buying, you know, from the moment that you first have contact with them. And you can work as a team to help that. But then during the transaction, you're going to often hit some road bumps along the way. So it's that continual conversations. You know, I've had it with clients where they stupidly went out and got a massive car lease just before they were going to get a mortgage. So what they qualified for beforehand, I don't know if it's the same here, it is in the US, but literally they qualified for a certain amount. They then spent probably the equivalent of £600 a month on a car. Boom. They then qualified for a bit less on the house. Their mortgage didn't go through. And it was just like, they didn't tell any of us. They just literally said, I've went and done it. And so I think it's really crucial to have that relationship where everyone's open and honest. You can get in front of any problems. And I remember in America, whenever you used to buy a new home, they used to incentivize the new buyer if you used the lender who was linked to the new home. I don't know if it's the same here at all, but
you can't have to
the
be a
lender
little bit careful with that.
It was always useless. They were always absolutely useless. And I think I remember 2 times where the deal would have fallen through because they were like, oh yeah, you qualify for this, no problem. Put this. And then when it came down to it, they didn't qualify. But because the mortgage broker that I work with had a few different products, they managed to make it work and get it closed. So for me, it's unbelievably important for someone for clients to use someone that they know and they trust, but then also for estate agents to build a relationship with a mortgage broker that they know and can trust.
Yeah, it's also important for the agent where recently any offer that comes in, I get them to speak to my finance department. That's an independent mortgage broker. He then qualifies the buyer much better than I can. He can then say, yes, James, they can definitely proceed. Secondly, that broker, he might be able to get, he could actually maybe get them a better rate that could help the buyer. And then I actually benefit from that relationship where if I then pass that broker leads, anytime when he has a vendor that might want to sell, he then passes the leads back to me. So it's a kind of win-win for all involved, actually, if you get a good mortgage broker on your side as well.
Yeah, I think you can also add in the sort of market updates. And I think, Sam, you tend to be more sort of, you get a lot of the industry press and you're probably more ahead of the game than the media will be. So we kind of get that sort of, frontline updates of what's actually happening from the coalface rather than having to rely on, the media telling us what's going on, which I think is really important. And vice versa. Because of course we see what's happening from a residential point of view and obviously from the buy-to-let investment side of things as well. That it's key, I think, for any agent that's working independently to definitely have relationships with a broker, certainly.
Sam, who is it? Buyers, first-time buyers. I'm finding a lot more aware about ground rent and service charge. If I send out a listing, the first thing sometimes they ask is how much is the service charge? When maybe 2 or 3 years ago, people didn't really question that. Who is it that's asking them to ask? Is it the lawyer or was it the mortgage broker?
Well,
or is it just because everyone's talking and finding out about big service
charges
and ground rent?
It's been in the media quite a lot, actually, with the whole sort of leasehold reform stuff. And I think what I've found, a lot of people don't quite understand it, but it does have effect on mortgages, right, Sam?
That's right, yes. I mean, it depends on the lender that you're going to use, but typically they will look to take a service charge and a ground rent almost as a deduction, almost as a loan with regards to affordability. Again, with all these things, there can be certain margins on them, but I think that's right. As John was saying, I think that it's been a little bit more in the media now, and with leasehold reform, and also I think there was a little bit of bad press around maybe people getting involved in. I think what can happen is sometimes management companies can sell out to management companies, and then there can be huge increases in ground rent and service charge, and then that was coming back a little bit, and I think that then increased the focus. So a mortgage broker it wouldn't necessarily obviously be the first question you'd ask, but certainly as you were talking, or as the investor from the client's perspective, as they identified the property that they were looking to purchase, sure, that would be a subsequent question. And then what may happen is then when the valuer goes to value the property, they will ask the solicitor to confirm what the ground rent and service charge is. So there is that kind of steady theme, and then obviously the solicitor will look on the lease documents and confirm that back into the lender. But to be honest, it's not something that has caused too many problems with regards to affordability. Unless you get the very occasional one that might be a high-rise block in London Bridge, and the ground rent and service charge is several £1,000s a year. So it's certainly several £100s a month.
Yeah.
And that can sometimes just something to be aware of, really. But to be honest, in terms of that actually having a negative effect on mortgageability or affordability is very limited in my experience.
Sam, I was just going to ask you a question. So something that's come up quite a bit with myself, I found, is the lenders not liking escalating ground rents now, especially if they go over a certain level, which I believe is £1,000 over the whole of the lease term. It'd be good to maybe for listeners to what are the sort of, let's say, more restrictive parts from lenders that have, things like lending above commercial. I found that's tightened up quite heavily. I had 2 listings this year, or that went through this year and last year, which were above restaurants, which both the buyers had bought within the last 4 years and had managed to get a mortgage without any issue whatsoever. But then now are not getting lending at all. Is there other things that people, that the lenders don't really like? What are the things that people look at?
Yeah, good question. I mean, I think that the appetites of lenders do change and do fluctuate, and certainly you've highlighted there something that perhaps has had a little bit more emphasis on it than did previously, above commercial residence. Again, I would look to mitigate that as best I could by there be sometimes it might be over the road from a pub or a betting shop or something like that. But again, like with all these things, a bit like with lenders' different appetite to background debt, lenders do have different appetites for that. So it's about looking at that and matching off with the correct lender. The other things that lenders might consider is obviously you've got the kind of minimum floor size, which is normally over and above 30 square meters. That's not normally something that we run into, but that's obviously just something to keep an eye on if it's a studio flat or something. Escalating ground rent you've mentioned.
Isn't there height of buildings as well? I think, isn't there?
Sure. Yeah. I mean, then towards the ex-local side of things, again, there's a few more different caveats. If it's a block and it's above 4 or 5 stories, typically lenders will certainly ask the question around whether it has a lift. That's quite a big thing. Deck access is another big thing. if an ex-local, normally it's an ex-local authority block. Sometimes it's privately built. It just depends. But if there's deck access, again, that's another bit of criteria that would inform me of the type of lenders that I would look at. The one thing that I've just come across, maybe it's a little bit of recency bias because I've been dealing with it over the last couple of weeks, was a nice 3-bedroom garden flat in North 1 in Canonbury, in near Highbury, or in Highbury, Islington Council area. Lovely property, in reasonable condition, and that was turned down by 2 or 3 lenders that we tried with. The reason being is lenders will look at the percentage of private ownership or the demand for ownership in that area. And I think, and this may be something that comes up a little bit over the next year or two in certain areas. Obviously, ex-local authority blocks, there's less properties coming to the market because the majority of them are owned by the council. So you've already got that downward pressure on the way that the valuers would measure demand, which is quite simplistic. They would look at how many properties in that area have been sold over a certain period of time, and they won't look at the background reasons behind that. So you take these areas that are lovely ex-local authority, low-rise blocks, 4 stories. The property in question that I was looking at was a ground floor flat, so it had a nice little bit of garden outside. That was turned down by 2 or 3 lenders because there wasn't provable demand in that area. Because effectively, as I say, because the majority of the blocks were council owned, they weren't coming up for sale. Now, I mean, personally, I find that quite short-sighted, to say the least. If a 3-bed, if a 3-bed garden flat in N1 in North London isn't desirable, then I think there's obviously some trouble around. So I think
it's crazy, isn't it? I think the same with that. I had that 1-bedroom above a restaurant in Earlsfield, and it was turned down due to the restaurant being there, and obviously the reasoning being that it would be really difficult on resale. But the thing is, I had 8 offers on it. So and they all, if they'd given mortgage lending, it was the easiest flat in the world to sell. So it's kind of like a chicken and the egg. It's like they want to lend on it, but if they did, it would be the easiest flat ever. But they don't want to lend on it because it's hard to sell. So you're kind of creating a problem that isn't there. But I suppose that's the sort of the way it is with banks. But I suppose having someone like yourself be able to at least have a human-to-human conversation with the bank to try and see if you can get a solution, rather than if you're not using a broker, then you just get computer says no and that's it.
Quite right. You've hit the nail. That's another reason. Valuations, we can work together on valuations. If for whatever reason a property is turned down or down values for whatever reason, maybe the valuer is just having a bad day and got caught in traffic on the way to the property, who knows? But of course, I will then have the dexterity to move the mortgage application across to a different lender who I know might have a little bit more sympathy or a little bit more latitude for the type of property in question through my own experience of using them. And of course, through my contacts with the lenders, I can talk to various people in various different departments and look to get the case escalated, if there's a time constraint, or re-looked at if necessary by someone perhaps a little bit further along, and look to get a more reasonable outcome.
Definitely.
Cool. Anything else you want to chat about today, Sam?
Nothing in particular. I think we've covered off quite a lot of the topics. There are a few schemes that are running at the moment with new build that have got some subsidised rates. I just touch on that, which is called Own New, OWNNEW, Own New. And we're seeing here that some of the builders' incentives, which I'm sure you're aware of, are now being used to subsidise the rates. So we're seeing some really impressive headline rates. The 0.99% at 60% loan to value.
Wow.
Yeah. So it's got to be a new build, and there's various different criteria around this, and obviously that 0.99 is a headline grabber. But they're better. They're 75%. You're looking at about a rate of about 1.9%. So there's some good stuff on the
So is that an incentive being paid for by the developer then? So
yes.
The developer's
it's a bit like
cash like Help to Buy.
Exactly. Exactly. It's a bit like the Help to Buy scheme. So it's got to be specific developers, specific home builders that have signed up to this scheme, and it's got to go through a registered mortgage broker who's registered with the ONU, which we are. So that's an encouraging development.
Oh, cool. Interesting.
Cool. And Sam, if anyone wants to get in contact with you, whether it's a potential home buyer or an estate agent that wants to work with you, how would they get in touch with you?
Well, they can always give me a call, of course, or they can drop me an email, and I'm more than happy to share those details in the most appropriate way. I mean, I can give you my number now if you like.
Do it now. Share it now.
Perfect. Yeah. So probably the best number to get me on is my mobile, which is 07941 428 604. Or alternatively, you can drop me an email, Sam at Roxborough, and Roxborough is roxborough.uk.com. They're probably the two easiest ways.
See, what I love about that straight away is someone can actually get hold of you rather than having to try and go through your bank to get hold of someone. That's why it's always so much better to work with an independent real estate agent or mortgage broker or whoever it is in life. If you can actually speak to the people that you're actually going to be working with, it is so much better. So thanks for coming on, Sam. James, Jonathan, how do we get hold of you as usual?
Yeah, Instagram, James Hughes Property, or just Google James Hughes powered by eXp.
Just put my name in, Jonathan Woods, into Google. It should come up with all of my channels via Instagram, and LinkedIn is Jonathan Woods Real Estate.
And I'm James George on LinkedIn, and I am on Instagram, JG_EXP. Sam, thank you for your time today.
Thank you so much.
Really appreciate it.
Thanks guys.
See you later. Have a good week, everyone.
Thank you. You too. Bye-bye.